question about deposit-related compliance, I'm going to ask you to go type your question in there. Now, there's no guarantees that we're going to get to every question in today's program. I've got over 40 of them that were pre-submitted, and I can see that the hopper's already filling up with those of you typing them in live. So go ahead and type them in. Diane's going to choose them so that we get to as many as we can during the 1 hour program today. Now, we're going to do some rapid fire here today. We're going to move kind of quickly, but note that this is being recorded. So if there's something that you want to go back and listen to, maybe you missed some notes along the way, because it is a bit of a rapid fire, we're providing the recording to you, and there's no cost to that. Everything today is on the house. So you can go and download that recording when it's available. One of the things you might choose to do today is if there's a question that you do want to go back and listen to more information about it, pick up your pen and write down the time of the hour, and that'll give you an idea when you go to that recording where exactly you need to stop, hit pause, and then play and listen to those things again. So start typing those questions in, and we're going to get to as many as we can during the program today. With that, Diane, I don't think I've left anything out. I've got some closing remarks that we'll get to when we close this thing out. There's a survey in the recording. I'll remind you of all that, but I think everybody here is ready to listen to some plain English answers to the questions that have been provided. So one of the things I'm going to do is I'm going to shut off this screen here so that you can see Diane and I a little bit larger on your screen. So let me do that. And then Diane, I'm going to turn the floor over to you.
Okay, we will start with Regulation E. Are unauthorized transactions conducted using apps such as Zelle and Cash App covered under Reg E, and when is the bank liable? For example, if a bank account or card is linked to a Cash App account and funds are sent to an incorrect person.
Yeah, this has kind of been one of the magic questions of the last couple of years in technology. Let me start with this. Regulation E, unfortunately, hasn't kept up with technology. So what's that leave us with? A lot of gray areas within that regulation. And so some of this is, I'm going to give you the banker's compliance consulting opinion. And then some of it you get to choose, what do you believe? Okay, or who do you want to believe, maybe is the better way to go with it there. But there's some eye of the beholder stuff here, some gray areas that you have to navigate. I'm going to do my best to kind of steer you in the right direction with this. So Diane, you mentioned Zelle and Cash App and Venmo, and I'll throw PayPal out there, and that's a very common one. But here's what Reg E says about these types of services. So when I sign up, I'm going to use PayPal because it's a very commonly used one, but it's similar to these other ones. So when I sign up with PayPal, okay, I sign up to have an account with them. And then I have to link some form of payment to PayPal so PayPal can then pay or load funds into my PayPal account. So when I sign up for a PayPal account, I get an account number, okay, or a login. Let's call it login. Okay, maybe it's your email address, but I get a login. And then I get a password so that I can sign in with that login to PayPal. So I register for a PayPal account. Okay, it gives me a login, credentials, if you will, and then I have to type in a password to access that account. When I do that, that then is an access device according to Reg E for that third-party app. Okay, why is that important? Because when I go to PayPal and say, okay, PayPal, tie back to my checking account, tie back to my debit card, or whatever I'm tying that PayPal account back to, that puts them off the hook. In other words, if ABC Bank is my bank that I bank at, and then I go and open a PayPal account, and so I get this login and I get this password, and then I connect my bank account to the PayPal account. If I conduct a transaction through PayPal, okay, and something goes wrong with it, that's between me and PayPal. If someone uses my PayPal account, steals the credentials, and does something that's not authorized with my PayPal account, that's not your bank's problem. Okay, it's not your problem if you are the bank. If I'm the customer, I have to go take that up with PayPal. They're subject to similar requirements like what you are under Regulation E, but you, the bank, will not be required to do that because you didn't furnish the access device. Yes, they're connecting the bank account to PayPal, but the unauthorized transaction occurred with PayPal. That's the access device. I'm to take that up with PayPal. Now I'm going to switch it up just slightly here to finish this one off. Let's say I don't have a PayPal account. Somebody steals my bank information with you and creates a PayPal account, okay, without my authorization. That is your responsibility because they took my bank information to create the unauthorized transaction in creating the PayPal account. So that's the slight difference there.
Okay, for banks providing statements electronically, does the Reg E notice need to be provided with the statement, or can the disclosure be available via a link on our website or mobile app?
So the Reg E statement that Diane's referring to there is the annual error resolution notice that has to be provided. So you either send a separate mailing out annually, or you provide it with each periodic statement. So this referenced electronic statements. Okay, it has to be provided with the electronic statements. It can't be something that's outside of that, if you will, on a website or in the email itself. It's got to be with the statement.
Okay, we'll move to Reg D. With the changes in Reg D, the 6 transactions limit was removed. I have heard that financial institutions do not need to revise their agreement. But what if our agreement states that the regulation requires the transfer limit? Shouldn't this be changed?
Sure. So the regulation did require those limitations. And so while the regulatory requirement went away, there's a lot of banks that kept those limitations in place, and I'm okay with that. I don't think that it says regulation states this is a huge deal. Now, if you decided to keep the limits and you have the word regulation in your disclosures, I'd probably look at changing that moving forward just so that you're technically correct. But do you have, if let's say you took the limitations away, yet your disclosure still states that, do you have to do a revised notice to all of your customers? No, I just take it out moving forward and let it be. Okay, good customer service would be to tell them, is it required? It's not required. Okay. We err on the side of good customer service, so I don't think you can go wrong with that. You could make it a statement message. There's a way to do this without having to incur a cost, if you will.
Okay, we'll move on to Reg DD, Truth in Savings Act. When quoting an annual percentage yield verbally, is it necessary to state APY with each rate?
Well, I'm going to err on the side of caution on this one too. I'm going to say yes, because typically when the customer calls, they don't ask you for an APY. They ask for interest rates. So you're likely stating the APY in connection with the interest rate. So if you're giving them multiple rates, so you have to state APY, let's put it that way. But if you're giving them interest rates and multiple different rates, then yeah, you should say, this is the APY for this interest rate. This is the APY for that interest rate. And that's going to make it easier for people moving forward. And it takes some of the potential for making an error out of the equation.
Are reimbursements of foreign ATM withdrawals considered a bonus?
No, they are not.
Okay, we will move back to Regulation E. On disputed transactions on an interest-bearing account, should interest accrue during the provisional credit period while we research if no provisional credit is granted? Or does the regulation mean that interest has to be backdated or retroactive to the point that the disputed transaction first posted?
Okay, so I'm going to start with a saying we like to use at Bankers Compliance Consulting as it relates to Reg E disputes. By the way, we've got a 2-hour program just on this topic. So you can see that first question had quite a bit to it. Here's another one that's got quite a bit to it as well. If your team needs more on this, and it's with a lot of these questions that come in today, we're just giving you the answer to the question. If you want more, we've got a lot of training out there that your team hopefully would benefit from. And if that's something you need help trying to navigate, give us a call. We can help you out with that. But back to the question. So when it comes to unauthorized transactions, now these would have to be unauthorized transactions that are covered under 1005.11. I don't like to do Romanette, but there's 2 different sections in Reg E that deal with unauthorized transfers. That second set, the .11 side of it, is the one that has the provisional credit requirements. And so if the customer tells you within 60 days and they put it in writing, you have to provide them provisional credit. Okay, if they don't tell you within 60 days, then you're back to the first section in Reg E. And again, details for another day there, but you don't have to give them provisional credit there. And then on the provisional credit side, if they don't put it in writing within 10 days, then you don't have to give them provisional credit. Now, why am I telling you all that? If you have an unauthorized transfer, rule number 1 is make it like it never happened. I don't care which side of the error resolution rules you're playing on, whether it's the 1005.6 or 1005.11, you need to, when it's all said and done, make it like it never happened, which means if there was money that was not in the account because it was taken away and it was unauthorized, when you put it back in the account, you need to pretend as if it was there from the date that it was unauthorized, and any interest loss needs to be provided back. Now, under that second set of error resolution rules, 1005.11, when you provide provisional credit, you need to provide any interest lost, okay, while the money was not in the account. So when you provide that interest loss, that's going to make it like it never happened. It also will then accrue interest while you're doing the investigation. Now, let's say you don't give provisional credit because they don't provide you the written notice within 10 days. So you didn't have to give them provisional credit. But when you end your investigation, you still have to follow rule number one, which was make it like it never happened. So you'll have to go back and say, all right, here's when the money came out and shouldn't have. So put the money back. Now you'll have to say, all right, what would the account have earned had the money been in there from an interest standpoint? Which means you'll have to deal with that and any compounding and crediting that also is associated with that. So there's a lot of moving parts there.
Okay, and you kind of went to this next question, but if a customer just now reports an electronic debit as unauthorized from a statement dated over 6 months ago, do we still need to investigate the claim, even though we don't have to follow the timing and provide provisional credit?
Okay, so again, Reg E has two different sections. There's 1005.6, 1005.11. The misconception about unauthorized transfers is surrounding the whole 60-day mark. Okay, there's this misconception out there because of really a failure to read the notice for what it really says, those error resolution notices in your disclosures. Okay, make sure you read them very carefully, because the misconception is if the customer doesn't tell you within 60 days of the statement being provided, is that they're off, the bank's off the hook. That's not what they say. What they say is that it's encouraged that the customer tell the bank within 60 days so they don't lose any more money. Okay, they don't take on more liability. So it boils down to this. The bank will always be on the hook for the statement on which the error first occurs plus the next 60 days. So statement plus 60 is the bank's liability. Now, yes, there's some liability tiers based on access devices that we're not going to get into today. They have to do with $50 and $500 limit tiers. But the plain English is statement plus 60, bank's responsibility. If the customer doesn't tell you within 60 days of getting their statement, they're going to be responsible for what's beyond the statement plus 60 mark. So it's in their best interest to tell you right away in that first 60 days so they don't incur liability, because their liability starts after the statement plus 60 mark. I have essentially forever to tell you about an error. So if I don't open up my statements for 3 or 4 years and I finally get bored one day and do that and go, oh, that's not mine from 3 years ago, you have to take that on. Now, you won't have to provide provisional credit because it wasn't provided within 60 days, but you will have to investigate and ultimately complete the investigation. And if it is unauthorized, make me whole again.
Under Regulation E, if an account has an EFT occur, a monthly statement is sent. If no EFTs occur, then the account will receive a periodic statement at least quarterly. How about dormant or inactive accounts? Must the account still receive a statement at least quarterly, and does it matter if we're charging a fee?
All right, so I think it's a commentary. I think the commentary states that when the bank defines an account as inactive or dormant, that statements are no longer required to be provided.
Okay, we'll go to Reg CC. If an item qualifies for an exception hold for a reason other than being a large deposit, can we hold the entire amount?
Give me that again.
If an item qualifies for an exception hold for a reason other than it's a large deposit, can we hold the entire amount?
Yeah, as long as it's an exception hold, yes. Yep. That was the word I was looking for.
Okay, we'll go to Reg DD. Are we required to disclose a dormant account fee?
Yes. Be part of your truth and savings disclosure. Yep. Your fee schedule.
Is there an issue with assessing continuous overdraft fees based on calendar days?
Okay, so the regulation isn't going to give you anything on this. The regulation is going to say that if you charge a continuous overdraft fee, Reg DD, if you will, truth and savings, that you have to show that in your fee schedule or as part of your truth and savings disclosure, the continuous overdraft charge. Those of you that charge a continuous overdraft fee, you got a big old target on your back, especially if you're regulated by the FDIC. They don't like at all of the continuous overdraft fee. And the other regulators aren't that far behind either. So I don't want to just stick the FDIC out there. They've just written the most about it. In fact, I'm going to give you a reference here simply because we've been working with this a lot lately. Diane, we've taken a lot of calls on this, but there's a public, not public guidance document out there that the FDIC put out in 2014. If you go Google continuous overdraft fees and FDIC, you'll find this document. It'll be one of the top hits. And that actually go to an article that's written by a third party but eventually there's a link in there that you can go to. But they talk about this specific question as well as several other things related to overdraft fees. Now, it is dated 2014, but I can tell you it's very much current information. It's not out of date. So back to the question. Is there an issue with assessing continuous overdraft fees on calendar days? The issue with that's being brought to the industry's attention with that specific question is it fair for the financial institution to issue a fee on a day that the customer can't fix the issue? So if let's just say you charge a continuous overdraft fee on the third calendar day. If the third calendar day is Sunday, you get to charge me a fee, but I have zero way of correcting it. Now, my pushback, okay, is that, well, if you really wanted to correct it, you could have came in on Saturday morning before, when the lobby was open, or you could have came in Friday. Well, I couldn't fix it Friday or Saturday, but I can fix it on Sunday, the day that you're going to charge. Remember, I get 3 days grace before that fee hits. Even though I get that third day, it happens on a weekend, Sunday, that you're not open, so it can't be fixed. That's the unfairness that they're trying to tackle with the calendar day counting of the continuous overdraft fee. Now, we've provided some consultation to some banks that have used calendar days, and one in particular says we're going to charge on the 5th calendar day. And they're like, well, if we start counting business days, okay, we're going to lose some income. Well, nobody says you have to wait till the 5th business day. Change your disclosure. Instead of waiting 5 calendar days, go down to 3 business days, and you'll probably not lose so much in the shuffle. Now, is that a change in terms? Is that a redisclosable item? Absolutely. There'll be a little cost there, but there's ways to do the same thing without hopefully losing the income along the way, for now anyway, when it comes to overdrafts.
Okay, we have one on privacy. Must every institution that offers online banking have an online privacy policy on their website, independent from the privacy policy we share at in-person account opening?
No, that's not required. Just your account opening, and then if applicable, your annual privacy noticing. That's the only requirement per the regulation. You don't have to have one posted online. A lot of people do as a courtesy, but you wouldn't be required to do that.
Okay, we'll go back to Reg E. If a customer comes to us alleging an EFT error, but it turns out they just bought something they didn't like or didn't get what they bought, so it's not unauthorized, is there any reason to keep record of these disputes?
Okay, so the key part of that question that I heard was, well, there's 2 things. One was that it was authorized. The other was, I'm not happy. So if it was authorized, forget about Reg E, and there's no requirement for you to keep any of that. Now, you might have a customer that sounds even like a complaint, but that's not really your complaint. They authorized it. They used your access device and they got something they're not happy with. Okay, if it was done by way of a transaction that's covered by Reg E, okay, you're out. Now, there is, just for reference, there is a not happy provision in Reg Z, truth in lending. So if that customer would have used their credit card, there's a not happy provision. Okay, meaning they authorized it, they got something, but they're not happy with it. And so they would have some provisions there to seek out if it was a credit card. But Reg E doesn't have anything like that. If they authorize it, you're off the hook.
Can we give a higher overdraft cushion to customers who have provided a Reg E opt-in?
All right, so this was a pre-submitted question. Diane and I chewed on this one yesterday afternoon. And so my answer is yes and no. Now, let me give you more than that. So I'm going to repeat the question. I wrote it down here. Can we give a higher overdraft cushion to customers who've provided a Reg E opt-in? Okay, if you're going to do an opt-in for one-time debit and ATM transactions so that you can charge those customers overdraft fees for those types of transactions that cause their account to be overdrawn, because that's the only way you can do it, right? Is if you provide the opt-in and they opt in so you can charge them. If they opt in, you have to give them a benefit. Remember, your benefit is you get to charge them. Well, what do they get out of the deal? Okay, so they have to get a benefit. That benefit across the board for just about everybody is they get a cushion of funds behind what's actually in their account that is going to be fed to the electronic payment system, so that when they go buy something for more than what's in their account, it will go through some of the time. Now, there's no guarantees, right? But that's the benefit that the customer receives. Now, this question was, can we provide them a higher cushion if they opt in under the ATM and one-time debit than we would for just I want overdraft protection for checks and ACHs? Well, we have to get in the weeds here a little bit. In the opt-in rules, it says you can't do something more adverse to the customer because they don't opt in for your one-time debit and ATM transactions. So you might still provide overdraft protection for checks and ACHs. Okay, so if I'm your customer and you say, do I want to opt in? And I say, no, I don't want to opt in, but I want to have an overdraft protection for checks and ACHs. That's something that if you offer, you have to allow me to have, despite not wanting to opt in for one-time debit and ATM transactions. You can't hinge one to the other. So that means if I'm going to be able to take your overdraft protection for checks and ACHs, I got to get a benefit there too. It's going to be a cushion of funds behind my account. So if you say we're going to give you a $200 worth of cushion if you opt in for checks and ACHs, okay, great. Now, Jared, if you opt in for one-time debit and ATM transactions, we'll give you an additional $200 for your cushion. Okay, that's the extra added benefit for doing that. If I don't opt in, I still get the benefit over here for checks and ACHs. So they'd have to be separate. So yes, you can give them extra. Now, why would my answer be no? If you say, Jared, here's your cushion if you take overdraft protection, it's $400. Okay, and if you opt in, it's the same. Okay, if you don't opt in, it's the same. Okay, then what's my benefit for opting in? So we have to be careful with how these things are set up. There has to be a benefit for the opt-in, and whatever you're giving can't be dependent. Whatever you're giving on the checks and ACHs can't be dependent on what is occurring over on the one-time debit and ATM transaction side of things. Two different overdraft protection services, if you will, that have to be looked at in silos and addressed within silos.
Do we need to give a new Reg E disclosure if we reissue a debit card?
So like a replacement card, no. So I have a debit card and it's been compromised or whatever. You issue me a new one. Do I have to give a new disclosure? Absolutely not.
Okay, Reg CC. If mobile deposits are not subject to Reg CC, what should we use to determine how long to delay funds?
Correct. Mobile deposits are not subject to the funds availability portion, the delay portion, the notice portion of Reg CC. There are some Reg CC things that I'm not an expert, our team's not expert in, that mobile deposits do apply to, but that's not part of this question. What do most people do? A lot of people follow just Reg CC as the roadmap for their mobile deposits. Even though it's not subject to Reg CC, they'll follow the same time frames. Some do something slightly different because it's kind of up to you. So what's your terms and conditions? What's your contractual agreement with your customer when they open up the account? What's it say about mobile deposits? A lot of them have been updated in recent years because of the changes in technology to reflect those new options like mobile deposits and remote deposit capture, things like that. So I'd look to first, what does your terms and conditions say about what you're going to do here? If it's silent, then you probably need to get something in there. If you do have something, do what you say what you do, or adjust it.
Okay, Reg D. If you've disclosed an early withdrawal penalty, can we waive it for no specific reason?
You have to be careful. So on time accounts, you have to have that initial 6-day or penalty for withdrawals in the first 6 days. 6 days, 7 days, I don't remember off the top of my head, but there's that initial time period. You have to have a penalty. After that, it's up to you. And so it's whatever you want to do. If you want to waive them, you certainly can. It's probably not a good business practice, but you can do it.
Has there been any talk of going back to Regulation D's transfer limits? In other words, has the interim rule become a final rule?
So there's a lot of confusion when that came out. When they made that change, when they took those away, they did some follow-up on it, and that they meant that to be final. there was 2 Reg D changes done at, I want to say they were done at the same time. It's been a while now, it's been a year. The confusion, I think, is because that other rule change relative to Reg D was an interim final rule, meaning that they were going to come back and address it. The Reg D limitation, that's meant to be gone. There's no talk that I'm aware of to bring that back to the table.
Okay, one that touches on advertising. Can we have a prize drawing for just new checking and or savings account holders? For example, come in and open an account within a set time period for a chance to win something.
That would be a lottery, and you can't do that. What you can do is offer that chance to win for opening up an account, in addition to it being open to the public to come in and fill out, a note card and for the same chance to win. So you can't just provide the chance to win for opening up the account. It would have to be, that'd be one way you could enter. Another way would, anybody from the public can come in and sign a 3x5 note card and drop it into the box, and they could also have the same chance to win. So if it was open to the public without a requirement to purchase, then it would be okay. But if you were limiting it to new accounts, that would not be okay.
Okay, back to Regulation E. Do we need different statement paper for commercial customers if it contains the Regulation E error resolution rights for consumer accounts?
You're not going to find anything that says that specifically in any regulation. I would have different paper from consumer versus commercial accounts, because I would not want my commercial accounts to think that they have protections from an unauthorized transfer standpoint like my consumer customers do. So I would encourage different statement paper. If you're providing it on the same, and I've seen that before, you could come to a point where a non-consumer customer says, well, this says this on the back of my statement, why aren't you protecting me? It could be an awkward discussion, but I don't know that you're not going to get it written up because it includes it.
I know Regulation E requires us to investigate and resolve claims of unauthorized EFTs. However, if the customer does not cooperate with us to where we can't investigate, can we use that as the basis to assume the transaction was in fact authorized?
I think you need to be really careful here. Yes, you do need some cooperation from the customer to a certain extent, but remember, once I provide you an oral, written or written notification of an error, you're now starting an investigation. Okay, you can't make me put it in writing. So as soon as I say, hey, that's not mine, you have to start working. Now, maybe you're trying to get information from me as part of the investigation. Just because I won't give you information doesn't mean it's not unauthorized. You may know without getting the information from me that, there's no question, I wasn't in, Mexico or whatever 2 weeks ago because maybe you met me in the cafe down the street. I mean, there's things like that, even though I'm not cooperating with you, okay, it doesn't mean it's not unauthorized. So you got to be careful there. If it's something absolutely necessary to prove it right or wrong, then yeah, I would say, I didn't get anything from you on this. I'm not sure what else to do. Our interpretation then, there is some subjectivity to these, is that it appears to be authorized based on you not giving us any additional information to show otherwise. And so I can see that side of it too.
Okay, here's one on FDIC signage. When do we need to include member FDIC on social media posts?
So I don't know this off the top of my head as far as the exemptions, but there's like 10 or so exemptions for the member FDIC disclaimer or symbol, if you will. So I'm going to say when it's not exempt, you need to include member FDIC. Now we would all need to go look those up, but that's the short answer to this. Now, if we're talking about your bank's social media site, so the bank's Twitter, the bank's Facebook, the bank's name and logo is probably already there. I don't do social media, but I know on Facebook, you're going to have your bank's name and logo there. So having it just on the page would cover you. But on social media posts where it's not the bank's page, but some team member is advertising, promoting the bank's products and services, then it would need to be included. Now, be careful, don't include it for things like insurance products and annuities where it's not FDIC insured.
Can employees from other areas of the bank, such as lenders, accept deposits from customers and take them up to the teller line?
I suppose technically they can, but you have to post then. So wherever deposits are taken, you have to post the funds availability language. So be careful with that. if you have lenders that don't have the correct signage taking deposits, that's not a good thing. And that's something that could get you in trouble.
Okay, Reg DD, if we give a bonus at account opening, does this need to be disclosed on the truth and savings disclosures?
Yes, truth and savings does have specific requirements for bonuses. And that's something I believe, Diane, we have out on our website. If you're not familiar with it, we have a resources page or pages that you can go and download free resources. And in the deposit section, we have a bonuses resource that you can go download that gets into all of those details about what needs to be required and when, as far as a bonus is concerned.
Do you have any thoughts on whether we should allow customers to overdraw their accounts at the teller line?
Oh boy. So if someone doesn't have the money, they shouldn't buy the stuff, right? That's my take. That's really up to you. I suppose there's some benefit somewhere for letting someone overdraw on the teller line, but gosh, I'm not a big proponent of letting people spend money they don't have, but that's my take. I'm sure there's some reason to do it. Diane, do you have a take on that, Diane?
I mean, I guess I don't know of anything that would prohibit it, but I think it's probably a best practice to let the customer know that, hey, they're gonna overdraw. They don't have money for this.
Yeah, hey, you don't have the money, you shouldn't go buy whatever it is. Yeah, I'm with you. I'm just curious if you had a take on it, because this was another one that was pre-submitted and I noodled on it. I don't know. I wouldn't do it, but maybe there's a reason.
Of course, it's also really easy to let someone know they don't have money for it when there's 5 people standing behind them in line. So.
Right. Yeah.
Can we give one truth and savings disclosure with all account disclosures to everyone?
Boy, it's been a long time. So the answer is yes. The accordion disclosure. I've been with Bankers Compliance now 16 years, and I want to say some of the first reviews I went on 16 years ago, some of the smaller institutions still were doing that. They were giving the accordion disclosure that had, it was a stapled bunch of papers, and it had every account, checking, savings, CD that the bank could offer, and it had all that truth and savings language in it. And what the banker did is they took their trusty pen and they went and checked the box associated with the account that was being opened. You know what I'm talking about, right, Diane?
I do.
And so those used to exist. Now with technology and computers and everything, that everything's so specific these days. We were talking about this, another one that was pre-submitted, and we've gone away from that, but what a great way in retrospect to cross-sell other products. I mean, maybe if we still did things like that, maybe people would see the other accounts be more apt to open up multiple accounts or different types of accounts. So maybe the strategy in trying to embrace technology and do exactly what the customer asked for here is maybe we've missed the mark on this one. Maybe the accordion disclosure would serve us all better in cross promoting our products and services. Just something to think about. Got us thinking outside the box a little. But yes, you can do that.
Okay, Reg CC. If a check has been deposited and we later question the collectability, for example, due to potential forgery, how long can we hold it?
So if we're talking about an exception hold, the most you're going to get is 7 days. And then in Reg CC, there's ways to extend that are deep in the regulation that I won't be able to speak to off the top of my head, but you're still going to get 7 days from the date of deposit. So Reg CC does say that if you didn't give the notice at the time of deposit, the day after the facts become known, but that 7-day clock is already ticking. You're not going to get more days. It's still 7 days from the date of deposit. I need to go off probably on a tangent here too. You mentioned fraud and forgery. If we're talking about fraud and forgery, at first I'll try to catch those before the deposit is accepted, and then you turn it over to law enforcement. We don't deal with Reg CC, but if you do take it for deposit, it is subject to Reg CC. But I mean, if you truly think it's fraud or forgery and that 7 days isn't enough, a lot of banks will take the small hit for Reg CC, the technical violation, okay, because of the fact that they know, okay, let's just say you're 99% sure that that's forged or fraud. They'll take the hit because they know that they're going to win in the end because it is a fraudulent document. So you've got to balance some of that out. Don't do that without seeking out counsel from your compliance and or attorneys, but that is something to weigh when you make some of those decisions.
Can we place a large deposit hold even if no one item exceeds the 5525, but the total deposit does?
So the large deposit exception is an aggregate. So it doesn't have to have a single item within the deposit that exceeds the 5,000 plus mark. It's got to have collectively items that exceed that 5,500 and whatever mark. And so as long as collectively deposit and aggregate exceeds that, then you can use that large deposit hold.
Okay, back to Reg E. What are your thoughts on potential errors under Regulation E when card information is stored on an Xbox or something similar? Should we treat those as unauthorized?
Yeah, the old Xbox, iTunes, PlayStation, whatever you want to call it, the phone in general with all the apps on it. How do we deal with that? So again, just like we started the program off, what are we, just a little over halfway, we're kind of back to, it's kind of the same thing. This is a gray area in Reg E, that technology has gone beyond the regulation. And so the regulation hasn't kept up. So Xbox, my kids have one, and for them to purchase things through the console, okay, you have to put in credit card information or debit card information. And what happens is it stores it. Okay, now, if my son comes and asks me to purchase something on his Xbox and we go down and we enter the stuff in, I'm authorizing in effect by providing the information or giving him the information, the credentials from my card to enter into the Xbox console to do that. Does that mean that when I walk away, that my son or daughter can then take that same information and buy future items? You won't find anything in the regulation on this, which is why it's a gray area. Most in the industry tend to lean conservatively here, and that when I walk down and my son said, can I buy? And I said, yep, we'll do this. And or I give him the credentials to go buy that item he or she asked for, that's authorized. But anything beyond that is unauthorized. But you're going, wait a minute, the information's locked into the system. And so by entering into the system, does that then, even though I authorize that one, I'm authorized everything beyond that? I don't think so. Now, side note here, I've been told by personal friends of mine where this has happened to, has nothing to do with banking, that when their children have gone beyond what they meant them to purchase, they've picked up the phone and called Xbox. They've called iTunes or whoever the platform provider is to say, hey, my son or daughter has purchased more than what I allowed them to. That shouldn't have happened. And in most cases, what I'm told is Xbox, iTunes, et cetera, they will give the customer their money back, no questions. Now, why do you suppose that is? They want to make it easy. Okay, like I said, a banker's compliance, we want to make things simple for you. Simple we can make it, we're going to do that. These companies want to do the same thing. Why? Because they want those parents, they want those children to be lifers. They don't want them switching from Xbox to PlayStation or the iPhone to the Android. They want them to be lifers for that product. And so when something doesn't go quite right, okay, provided it's not, a fraudulent forgery, somebody, taking more advantage of, they're going to give you your money back in most cases. At least that's what I'm told. Now, let's go back to what we're talking about here. If that comes to the bank, hey, I only authorized this Xbox thing and they went and my children or whoever went and bought more. Okay, well, if you truly didn't authorize it, then we're going to fully investigate it. And if there's fraud, we're going to turn this over to criminal, and we're going to report this. I mean, you can make some statements like that, and maybe you get a parent that says, well, I'll look into it at home. Okay, we're going to investigate to the full extent. You can say things like that. You're not trying to persuade them not to file an unauthorized transfer dispute. What you're encouraging to do is to fully check it out. Are you sure you didn't authorize this? Because this is a bit of a gray area. We've researched this multiple times over the last year or so. You can go out to different websites and you can see different opinions on this. There's people that land on both sides. I can tell you, Bankers Compliance Consulting, we're going to land conservatively on this, and most of these are going to fall into the camp of unauthorized. Facts and circumstances can differ based on each situation, but many of them where it's locked in, saved information in the console, in the app, on the phone, the whatever, initially, whatever was purchased was probably authorized. It's those subsequent purchases. Yeah, how are you going to prove that they weren't or that they were authorized, as opposed to what the consumer is complaining about, that they were unauthorized transfers. That's a tough thing to sell to examiners when they come into the bank.
If the customer disputes transactions from a few years back and a look back of the account reveals that transactions were previously authorized and similar in nature, is this a sufficient reason to provide evidence that transactions were in fact authorized?
You know, I suppose that could be information that may help your argument, but just because I've done something a number of times doesn't make the next one authorized. So you want to be careful there. You might be able to use it to help persuade your argument, but people that lie, cheat, and steal, they watch patterns too. And it could be, oh, they'll never notice one more transaction. They'll never notice one more of these missing. And so I wouldn't guarantee that just because you can prove a pattern that the one that's being brought to the table and described as being unauthorized isn't unauthorized.
One session that I listened to indicated that Reg E only requires you to cover 60 days, but you mentioned with debit cards, you could still have zero liability if unauthorized. Could you explain?
Oh boy, there's a whole lot of things in that little question. So we got to be careful here. So there's Reg E, okay? That's your contract from a regulatory perspective between you and your customer. Then on all of you listening, on your cards, you have Visa or Mastercard, and Visa and Mastercard both have zero liability. That's a Visa and Mastercard agreement between you and Visa and Mastercard. And then you also let the customer have the benefits of the zero liability afforded to the bank by Visa and Mastercard. Reg E doesn't have any zero liability. So keep those two things separate, okay? Visa and Mastercard zero liability rule, their criteria for that, okay, is their criteria. But it can never go above and beyond what Reg E requires in order to make the customer whole again. So if the customer wants zero liability, they'll have to answer to Visa and Mastercard's rules. If they don't, you still are subject to Reg E. So keep that in mind. That's one of the things I read between the lines in that question. The other is this, the 60-day thing. The only 60-day tie back to Reg E is that if they don't tell you within 60 days after the statement has been sent, okay, then it's not going to be covered under 1005.11, which means you don't have to give them provisional credit. That's the only thing about the 60 days. Otherwise, the investigation has to be completed under 1005.6, which says you have to investigate and make them whole again based on what the liability is in that section. Now, maybe I probably went too far with the 60-day thing there. It's subject, the 60-day thing ties back to that section in Reg E that has to do with provisional credit, but then it also ties back to the consumer's liability. Okay, the consumer's liability is that beyond the statement plus 60. The statement on which the error first occurs plus the next 60 days, that's what the bank is on the hook for. Outside of that is the consumer's liability. So that's the references to statement plus, or to the 60 days in Reg E. If the customer doesn't tell you within 60 days, you just don't have to give them provisional credit. You still have to investigate, and the statement plus 60 liability limits still apply. I hope that helps. If it doesn't, please write back in. We'll try to tackle it again.
What posting order or review process is recommended to ensure no criticism from regulators for overdraft fees?
Oh, I wish I knew the exact answer to that question. A neutral one, according to the guidance, but even that's not a fair answer because there are certain things you do have to process first. Let me try to answer it this way. The way not to do it is to maximize overdraft fee income. So if you go to your management team and says, hey, I got this great idea, you know what we're going to do? We're going to process transactions this way, and it's going to make our overdraft fee income go through the roof. Bad idea. Don't do that. As neutral as you can get it in a way that's showing that you're not trying to maximize overdraft fee income. That's the way to do it.
Okay, so this individual says they're doing a trailer wrap on a pull behind trailer as an advertisement for the bank. And they're wondering, would we need member FDIC on all sides of the trailer, or would just one side be sufficient?
So is it one big continuous sign?
That's what I'm envisioning.
What do you think?
I thought once would be good, but
I'm envisioning one big wrapped sign and member FDIC being on at one time. I guess if that's not right, cite me. I mean, hey, your trailer out there doesn't have enough member FDICs on it. You're gonna have to go get 3 more.
I think at some point we could maybe say it wasn't practical. Isn't that one of the exceptions?
Oh, practical and compliance is gonna be fun.
Okay, for online consumer account opening, we access a qualifier report that scores consumers based on their retail banking history. For those we do decline, do we have to provide the FCRA notice containing the score, the reasons, and the disclosures? We do not access traditional credit scores.
The answer to that would be yes. That would have to include that credit score information that needs to be provided. Yes.
Are financial institutions allowed to place a hold on any type of electronic funds transfer for any reason, such as new accounts?
I'd have to look that one up. I know there's certain types of transactions you can't delay. Do you know that one off the top of your head, Diane?
My guess was going to be no, that you could not.
Yeah, I've got this thing that I'm envisioning. We've got a quick reference thing that says you can't place delays on these items, and that's what I'm envisioning.
For Regulation E, when a customer calls with an unauthorized ACH transaction, we complete the written statement and have the customer sign it, immediately giving the customer credit and sending the transaction back via the ACH. Since we are not giving provisional credit, do we have to do any additional investigation, or should we be giving provisional credit and then final credit when the bank gets the money back?
So if I'm hearing that correctly, it's an ACH, whatever, you're immediately returning it and your bank's issuing what I'll call a final credit. Is that what you're reading? So
Yep.
Can you do a credit without investigation and have it be final? Yes. Reg actually has that written into it where you can provide the funds back without doing an investigation and just make it final. Yes. And a lot of times that happens with like ACHs that are within the 60-day mark that you just return, as well as those below investigation limits if you're outsourcing them to like a third party.
Given Reg CC does not apply to savings accounts, what options are available for placing holds on check deposits into a savings account? And do banks typically provide paper or verbal notification?
So savings accounts, in fact, when we teach our Reg CC class, we've got that. That's one of them that's available on demand in our library. When we get to, there's a certain part in there, we get to this kind of summary that says, all right, when somebody makes a deposit or is planning to make a deposit, you don't feel good about it. Okay, what are your options? Well, if you take it for deposit, you're going to be subject to 7 days or the case by case, even shorter delays. And sometimes that's not enough, or, you know, you really don't feel like it's going to clear in the time that is provided. And so, can you still hear me, Diane?
Yeah.
Okay, because I'm going to have to swap a battery out here in a moment. Anyway, the options are take it for deposit and do Reg CC, exception or case by case delays. If that's not enough, then one of the options is to refuse it for deposit. You can refuse most deposits. One is to send it for collection. Okay. And another is to say, you know, we can't put this into your checking account, but we would allow you to put this into a savings account. And then what are you subject to there is going to be based on state law. And so whatever the state law, most states or a lot of them that we've dealt with don't have any state laws. So it's whatever you feel is sufficient so that check clears and you know whether it's good or bad. I'm going to swap some batteries out here while you go to the next question.
Okay. Regarding advertising deposit products and fine print, and they're worried about UDAP here, is fine print okay as long as it's legible? For example, promoting an account that requires e-statements when that requirement is in small print below. Oh, I think we can't hear you, Jared. Jared, why don't you?
Can you give me that real quick one more time? That battery was tricky to get swapped.
Absolutely. So regarding advertising deposit products and fine print, and they're wondering, is fine print okay as long as it's legible? They're worried about UDAP.
Yeah, fine print's always a tricky one. In fact, there's certain rules about equal prominence, especially if we get into truth in lending, about the size of the wording. From a UDAP standpoint, there's a thing called I think it's the 3 Ps of deception that the Federal Trade Commission put out. I think you'd be able to go Google that, the 3 Ps of deception. It's like prominent, something, something, and something. You mentioned earlier, logic or something like that. That's what this comes down to. You know, look at it from the mind of a reasonable person. Well, what's that mean? If it doesn't look right, I mean, and put it in front of somebody who maybe doesn't do what you do for a living, so is not a banker, you know, if you got this, does this make sense? You're not going to find anything. It's eye of the beholder stuff when it comes to UDAP.
What are your thoughts on some banks that I've heard of no longer requiring a signature card for a new account?
You know, I don't know that I have an answer for that one. I've not ran into that. Have you?
No, I have not. I thought it was interesting. So
Yeah.
can you provide what constitutes an investigation of a Reg E dispute, whether only within our internal records, or do we need to do a merchant retrieval request?
Merchant retrieve. I don't know that I've ran into that. Here's another one, Diane. Have you ever heard that terminology before? No, I mean, you need to conduct a reasonable investigation to determine whether it's authorized or not. If a lot of banks go through a third party that has the chargeback rights and all that stuff that goes along with it. Are you required to reach out to the merchant? No, but if that's necessary in trying to make the determination, I would say you probably should. Now, are they all going to respond to you? They may not. That's the best I can do for that one.
What would you consider a best practice for documenting a reasonable cause to doubt collectability for Reg CC? And how detailed would you recommend that documentation being?
So the regulation, Reg CC, gives a laundry list of what we'll call illustrative examples for the reasonable cause to doubt collectability for Reg CC deposit delays. I would stick to those as closely as you can. And so by way of the model forms provided by, or the model language in Reg CC, I don't think you need to go beyond that. But let me give an example of an area where you would. And so there's one on there that is, we have, you know, internal reasons. And I know do you know the wording of that one right off the top of your head?
I don't.
Oh, but there's one on there and it's like, no, you don't give them the information, but you have to retain it internally. And so, you know, proprietary things like that you wouldn't necessarily give out, you still have to document it. If you reach out to try to verify funds, and I know some examiners don't like that, we would recommend that you write down who you talked to, when you talked to them, and what they said relative to your verification of funds. So I don't think you need to go overboard. Try to stick to the illustrative reasonable cause examples and go from there. Now, I say they're illustrative because when you read the reg, that was the intent. That said, there are some regulators out there that say you have to stick to these reasons and these reasons only, and they're not necessarily illustrative. And that's a fight that you have to decide whether or not that's something you want to engage in, or you just take your lumps and move on.
When opening an account for a new entity, should or can that account be treated as a new account if the LLC signer has an existing relationship with the bank?
For what?
I was assuming Reg CC that was the angle of whether that would be a new account.
So signers don't have anything to do with Reg CC. Reg C is about owners on the account. So I believe Reg CC says at least one of the owners have to be brand new to the bank. As long as one of the account owners is brand new to the bank, you should be good to go as far as it being a brand new account, if we're talking about the new accounts hold.
If we have an account that has fraud associated with it, can we also close the other accounts also owned by the same clients? We are giving 30 days notice to close it.
I think you're being generous with the 30 days. I don't think there's any reason you'd have to do that. there's no, I mean, as long as you're not, there's no such thing as fair deposit, but the CFPB would like us all to believe that there's a fair marketplace now, and UDEP absolutely intersects with that. So we want to make sure that we're not discriminating, and we're going to borrow from Reg B, the Equal Credit Opportunity Act, and their protected characteristics there. So don't go there. That would be bad. But as long as you're steering clear of that, you could kick them to the curb immediately if you want. Sometimes I think you're taking on more risk than what's necessary if you're keeping it around for 30 days. Now, if you've done the risk assessment with the relationship and there's no additional risk to the bank to keep it around for 30 days, it's probably not an issue. But if we're talking illegal criminal activity, stuff like that, a potential loss to the bank, we can't get them to the curb fast enough.
How far back does a customer have to dispute an item as unauthorized?
Regulation E does not have, so the Regulation E does not have a sunset. In other words, as far back as, it goes, if you will. So there's no date. That's always been one of the interesting things about Reg E. You all probably are aware of how much consumer protection is out there in Reg E. This is just another example of how far it goes. There's no sunset date on it.
Okay, and along another Reg E one, when should our timing start? If we're notified of something before it hard posts under Regulation E, should our investigation start as of the day that it hard posts to the account?
Yeah, so consumers get to see a whole lot more than they used to, right? Because of online banking. And so they can see what's pending and what's final and all that stuff. Now, once you're put on notice, you're on notice and you're to start the investigation. Just because it hasn't hard posted yet doesn't mean it's not unauthorized. Now, you might be able to immediately stop it and return it, like in the form of an ACH or something like that. A point of sale, once those go through, they're going to hit the account. So it's best you get started right away. So as soon as I provide you that oral or written notice, hey, your investigation starts.
For ACH disputes, do you have to investigate if you don't make the provisional credit final until the bank gets its credit?
Okay, so one of the things that we've investigated quite a bit is it okay for the bank to wait as long as Reg E allows you, or it's not even a way to say it. Is it okay for the bank to wait, okay, the time frame that is, and allowed is not the word I want to use here, but so let's just, Reg E gives you, if we're talking about 1005.11 and the provisional credit section, so they told you within 60 days, and they did or didn't put it in writing, but now you're subject to this 45 or 90-day clock, depending on the type of transaction. So let's say you immediately return the ACH. And so now, do you just get to wait until 45 days to give me my money back and make it final? Now, again, you'd have to satisfy the provisional credit stuff, but let's say I didn't put it in writing, so you didn't give me provisional credit. So can you just sit back and hold my money until the 45th or 90-day, depending on what type of transaction it is? I'm going to encourage you not to do that. Remember, this is a very consumer friendly regulation. The 1005.11 language mentions that you should investigate and credit promptly. I don't think that means you just get to hold on to the money until day 45 or 90. If you know it's unauthorized and you've reversed it and it's done, give the customer their money back. Waiting until the last minute to me just doesn't seem like a real great practice.
Is a debit card application required to be signed for a new card when there has been fraud?
There's no regulatory requirement that application be signed, no.
Is confirmation of delivery of goods ordered via a card not present transaction adequate proof to argue a transaction is not an error? The address matches our customer, but the name on the order does not match.
So give me the first part of that again, just the first few words.
It sounds like they got confirmation that whatever was ordered was delivered.
So there's a confirmation of delivery. Somebody could have showed up on, if I work in a business, okay, I work at home, right? And so when somebody delivers something to my house, I go answer the door. But if I'm not here and there's somebody who's a liar, a cheater, a thief, and they've used my account information and they know what day it's showing up, they could show up at my house and receive delivery and sign off on it and leave my house, and they stole whatever they meant to steal. So I don't think that that's a 100% that you can take that there's a signed receipt of goods received, I don't think that that's a black and white, that means it's authorized. Would you agree?
Yeah, I would agree. So.
All right. Well, I tell you what, I have that we are just a minute or so beyond the top of the hour here. And what we want to do is make sure we are good on what we are delivering here. And that is, we mentioned we do an hour worth of Q&A, and we've come to the end of that. I don't know how many we got to, but we rapid fired a lot of questions and answers today. And I know we didn't get to all of them. Our goal here is to get to as many as we can during the 1 hour time frame. This has been recorded. You'll be able to access that recording once we get it put up there, and we do that pretty quickly. I know we generally say 2 weeks, but it's usually much quicker than that. I'm going to share my screen here briefly with everyone. And I want to mention the next forum that we're going to be doing, and that is the Bsa Aml Q&A forum. We're going to be doing that on July 20th. You can already go and register for that. It's going to work just like this one. You have the opportunity to pre-submit your questions about Bank Secrecy Act, anti-money laundering, as well as bring them live during the show. Just like today's version, we'll get to as many as we can. It'll be recorded, etc. But my teammate, Kevin Edwards, along with Michaela Wigner and Deb Irving, are going to be the ones that are going to be the presenters for that show. I'm going to be along to moderate, but they are our superheroes when it comes to Bsa Aml here at Bankers Compliance Consulting. With that, I've got just a short closing for everyone here today. First off, thank you for joining us over the course of the last hour. Hopefully you're walking out with some more clarity than what you walked in with some of these questions, answers, and maybe just learned a little bit about what the industry is asking when it comes to deposit compliance and the questions associated with trying to deal with those issues along the way. There is a short survey that likely popped up in a browser behind the screen. We'd love to give you a little bit of feedback, or love for you to give us a little bit of feedback on today's program. We're always striving to move from good to great. So if you take it, it'll take you less than a minute to do that. Once again, get your team registered for that next version of our compliance forum. We're going to be doing the Bsa Aml in July. Pre-submit those questions. With that, on behalf of the team here at Bankers Compliance Consulting, Diane, myself, we want to again thank you for taking an hour out of your time here to stop by and do a little deposit compliance Q&A. What we're going to do now is let you all get back to what it is you do so well, and that's serving your customers. Thanks again.